Did you buy a mutual fund last year and get stuck with losses until now? Did you just exit a stock only to see it hit its ceiling the very next day? Why does everyone else seem to profit from their investments while you're always losing money? Have you ever invested with high hopes of achieving financial freedom within a year, only to see that a year later your account balance hasn't grown? In fact, it shrunk? Where did things go wrong? Don't worry. Today, we're going to talk about the 5 major pitfalls that 90% of investors fall into. Let's see if you've been caught by any of these traps. Pitfall 1. Focusing only on returns, not on risks. This stock went up 200% last year. It must be a sure thing. Sound familiar? Many investors only focus on the returns, completely ignoring the risks. But high returns usually mean high risk. There's no such thing as a free lunch in the market. The right approach is, before investing, ask yourself, where does the risk in this investment lie? What's the worst-case scenario, and can you handle it? Is this return a product of short-term luck, or does it represent a stable, long-term trend? Investing isn't just about how much you can earn. It's also about how much you might lose. Pitfall 2. Frequent trading and chasing the perfect timing. The market's about to rise. Buy now. No, it's about to fall. Sell, sell, sell. Some investors act like stock market weathermen every day, always trying to time the perfect bottom and top. But here's the catch. Even Warren Buffett can't do that. Studies show that most retail investors lose money because of frequent trading, and the transaction fees alone can wipe out your profits. The right approach is, if you're not a professional trader, don't blindly chase every market movement. Stick to long-term investing. Short-term market fluctuations are unpredictable, but over the long run, quality assets tend to appreciate. The truly successful investors are those who can endure the quiet times. Pitfall 3. Only investing in what you're familiar with without diversification. I only invest in the industries I know. That sounds reasonable, right? But the problem is, if you only invest in one type of asset, your risk becomes highly concentrated. For example, if you only invest in tech stocks and the tech sector cools off, your entire portfolio could be wiped out. The right approach is, learn to diversify your investments, spread your money across different asset classes, stocks, bonds, gold, real estate, etc. Don't put all your eggs in one basket. Consider global investments instead of focusing solely on one country's market. Look for opportunities around the world. This way, no matter how the economy shifts, your portfolio won't experience extreme swings. Pitfall 4. Blindly trusting expert prediction without doing your own research. A renowned analyst says this stock will go tenfold. Buy it now. This is perhaps the most common trap. Many people love watching financial shows or following so-called big shot analyses on social media, thinking that if an expert recommends something, it must be reliable. But the truth is, even top analyst predictions aren't much better than a coin toss. The right approach is, it's fine to listen to others' opinions, but you must do your own research. Don't follow the herd blindly. Before making any investment decision, ask yourself, if this investment fails, is it because I didn't do my homework properly? Remember, the only person truly responsible for your money is you. Pitfall 5. Believing that investing is a shortcut to overnight riches. I don't want to wait 10 years. I want an investment that can multiply my money tenfold in a short time. This is perhaps the biggest myth in the world of investing. The more you chase quick riches, the more likely you are to fall into traps. Those investment gurus who promise, invest $1,000 with me, and in 3 months you'll have $100,000. If it were that simple, they'd be the richest people in the world, and you wouldn't need to follow them. The right approach is, investing is a long-term process. Slow and steady wins the race. View returns rationally and avoid falling into the get-rich-quick trap. The most successful investors in the world are those who are willing to let time work its magic. Investing isn't about avoiding losses. It's about not repeatedly falling into the same pitfalls. Out of these 5 pitfalls, how many have you experienced? Focusing solely on returns and ignoring risks? Frequent trading and chasing the perfect timing? Only investing in what you're familiar with and not diversifying? Blindly trusting experts without doing your own research? Chasing overnight riches? If you've fallen for any of these, congratulations, it's not too late to change. At its core, investing is about making rational decisions and sticking with them long-term. If you can avoid these traps, the road to financial freedom won't seem so far away. If you found this video helpful, please like, subscribe, and I'll see you in the next video.